Welcome to Alpha Recap, your after-hours sector rundown from stockalpha.ai. We're looking back at what moved markets on May 27th. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed mixed today, and there was a lot to unpack. Tech, healthcare, and utilities popped, while crypto and energy felt the pressure.
So, what really stands out here is how concentrated the wins were. A few sectors had clear narratives, and everything else had to react around them.
Right, and the day basically boiled down to three durable threads: AI monetization in tech, clinical validation in healthcare, and deal-driven momentum in utilities and materials. But geopolitics and regulation kept a shadow over crypto and energy.
Let's start with tech, since that was loud. Meta was testing subscription moves, Amazon rolled out Gen AI studio activity, payroll startups flagged scalable annual recurring revenue, and chip and cloud suppliers kept the demand story alive.
Yeah, and that pushed a lot of people to think about AI as revenue, not just a cost center. Broadcom and larger cloud providers got attention because more monetization means more inference, which means more infrastructure usage.
Exactly. Also a cute reminder of hardware monetization. XReal announced a $299 AR glasses price point, which got people talking about accessory revenue for mixed reality.
Honestly, I was a bit surprised by that price. It signals a push toward mainstreaming hardware add-ons tied to software ecosystems.
Right. And the other thing is, when payroll software vendors talk about scaling ARR, that's a proxy for recurring revenue models taking hold across enterprise software, which ties back into cloud spending.
So the market rewarded that cross-sell and recurring revenue story in tech today.
Shall we move to healthcare? This was another clear win sector.
Yeah, two concrete data points got a lot of headlines. A mailed colorectal screening program that lifted participation by 18%, and a smartwatch seizure detection app that reportedly caught 98% of major seizures.
Those numbers matter because they translate into adoption and reimbursement narratives. If you can show real uptake and near-perfect detection for a serious condition, payers and regulators pay attention.
Exactly. Data like that reduces uncertainty. It's easier to model expected revenue when you have real-world performance metrics.
Okay, infrastructure. Deals dominated that space today. Digital Bridge had a big move.
And the number that really caught our eye, $1.05 billion for an acquisition, plus a separate $450 million of financing tied to battery energy storage systems.
Those moves were big because they showed that capital is still flowing into utility-scale projects. Financing availability can materially compress execution risk for storage deployments.
When financing lines show up at that scale, it speeds up PPA signings and construction timelines. Analysts noted that it gave developers clearer paths from contracted revenue to cash flow.
Short reaction.
Big deal flow.
Not what anyone expected.
Let's talk crypto. A day of two halves.
On the institutional side, there was progress. MasterCard advanced New York BitLicense access, which is the kind of infrastructure normalization that helps large firms. But retail and fund flows told a different story.
Right. Large outflows, reports of institutional sales, and sanction-related allegations in parts of Asia created significant downside pressure. Not a great day for crypto sentiment.
Flow metrics were the headline. Institutional rails are necessary, but the net effect on prices was dominated by liquidity and regulatory headlines.
Analysts note that custody flows, ETF and trust inflows or outflows, and reported big trades are often more predictive than single infrastructure announcements.
Energy also had a split story tied to geopolitics. Disruptions in the Strait of Hormuz pushed Asian buyers toward U.S. LNG, which was supportive for some exporters and shipping, but oil prices slid on traders pricing in a possible diplomatic outcome.
So the sector saw headline volatility. Some names benefited from rerouted demand, while others lost the geopolitical risk premium as diplomacy entered the equation.
Materials and mining had project wins and a rare earth acquisition, plus new lithium processing notes from Metso. That's the kind of supply-side news that could matter for batteries down the line.
Agreed. But near-term dynamics are still tempering optimism. China's integrated mine-to-magnet advantage and lithium processing cost uncertainty are real constraints.
Let's pull back and hit the cross-sector themes we kept seeing.
First, AI and monetization cut across tech, consumer, and healthcare. Companies are trying to turn AI into recurring revenue. Second, geopolitics and regulation are immediate re-rating catalysts, especially for crypto and energy. Third, capital deployment and M&A are driving re-ratings in capital-intensive sectors like utilities and materials. And fourth, clinical validation is increasingly what drives healthcare multiples.
Put simply, data and capital create optionality. Geopolitics and regulation take it away.
Short reaction.
Truth bomb.
Let's run through the most significant moves and why they mattered. Quick bullets.
Digital Bridges deal and best financing signaled capital is available, and underwriters are backing long-duration storage, which shortens project risk timelines.
AI monetization headlines. Subscription experiments and Gen AI toolkits suggest the market is shifting toward charging directly for AI services, which raises cloud and chip demand.
Healthcare validation. Measurable screening uptake and high detection accuracy reduce payer uncertainty and make revenue more modelable.
Crypto's dichotomy. Institutional rails versus net flows. Institutions are onboarding, but outflows and regulatory shocks still drive prices.
Energy volatility. A reminder that choke points like the Strait of Hormuz can reroute flows and set price floors or ceilings very quickly.
Okay, some practical, non-personal insights that analysts were flagging today.
First, stress test exposure to regulatory tail risk in crypto and healthcare reimbursement scenarios. Second, watch capital deployment signals in utilities and materials as leading indicators of pipelines. Third, favor companies with clear AI monetization paths and cost controls. Analysts note gross margin sensitivity to AI workloads matters.
And don't forget, track geopolitical catalysts for energy allocations and use clinical outcome data as a valuation filter in healthcare. For crypto, custody inflows and liquidity metrics often precede price moves.
A few quick sector watches for the week ahead. In tech, watch cloud guidance and subscription experiments. In healthcare, payer feedback and regulatory milestones. In utilities, PPA announcements and construction starts.
Materials. Monitor drilling results and lithium processing cost disclosures. Energy. Keep an eye on LNG cargo movements and diplomatic updates. Crypto. Custody and regulatory filings.
Wrapping up, what's the takeaway?
May 27th felt emblematic of a bifurcated market. Tech and healthcare got clearer growth narratives backed by measurable steps. Utilities and materials were driven by real money and deal flow. And geopolitics and regulation kept risk premia high in crypto, energy, and parts of real estate.
So the three forces to watch going forward. 1. AI monetization cadence and cloud/inference costs. 2. Geopolitics and regulatory rulings. And 3. The pace of capital deployment into energy transition assets like BESS and battery materials.
Analysts note markets will keep discriminating between firms with measurable adoption and clear execution plans, and those relying mainly on narrative.
Final quick takeaways. Data beats hype. Capital enables projects, and headlines can swing risk premia fast. This is for informational purposes only, not investment advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll see you after the next close. Take care.